Happy Monday, everybody. I hope you had a great weekend. Today is November 14, 2022, and this is your Monday market update. Last week was full of information, a lot for a slow post-jobs week. Let's recap last week and let's set up this week ahead. Monday, stocks gapped higher as once again there were reports, the Wall Street Journal this time, the Chinese government are finally coming to terms with the idea that the zero COVID policy may not be a good long-term plan. The report over the weekend was that the government was setting up a reopening committee. No timetable. Overall, still early, but remember that this is one of the keys to the market finding a bottom. If we can see the Chinese economy get back some of its old strength, that is good for the global economy. The Wall Street Journal further reported that there are possible steps being set up. There is a plan to reduce hotel quarantine time from 10 days to 7 days. All of this while China is currently reporting their highest COVID infection rate in 6 months. Reported numbers are all over the place. I've seen everywhere from 4,400 to 8,000. Also, a San Francisco Fed report about the current monetary policy being too tight. This helped the markets. Maybe we are at peak hawkishness. Remember, we heard from a lot of Fed heads last week. They have a job to do, potentially talk about what they think, and Powell will sit back and see how the economy and the markets react. This is just taking the temperature of the markets. Midterms and Thursday's CPI kept things tame. The S&P up about 1%. The Dow was up 1 1/3%. The NASDAQ was just under 1%. Nat gas was up 5.13% on the day. I'm going to report these moves for the week in case you thought there was volatility in stocks. The Europeans have seen their gas bills more than double in the past years, up 111%. The EU government is pledging huge amounts of money to help consumers make these payments. Tuesday, of course, was the midterm elections. The markets were as expected, slow and more quiet than usual. Welcome if you like that stuff. Markets opened close to unchanged with no real data to work with. Markets continued to price in a split government and seasonal action in the markets. Now remember, the S&P 500 has rallied an average of 32% from the midterm year lows since 1950. As of Tuesday, the S&P 500 was 6.5% off the lows. Also, since 1950, the average S&P gain after 1 year post-midterm elections was 14.17%, and no declines. Markets rose into lunch, and then crypto news hit. Well, we won't go too far into that just now, but just know that one of the crypto heroes, Sam Bankman-Fried, the founder of FTX, ran into liquidity issues, agreed to be sold to Binance, and 94% of his $16 billion wealth evaporated in a day. No matter what your opinion on crypto, this was enough to scare markets and give back all the gains on the day. The markets were content, waiting on the election results, even though, as I've told you, that this was not to be a major catalyst, unless the unlikely would have occurred. Either the Democrats retain both houses, or the Republicans will get enough wins to have a veto-proof margin. Both are highly unlikely from the beginning. Markets were already looking ahead to Thursday's CPI and next Tuesday's PPI. All about Jay Powell and the Fed. Remember a few months ago I told you that he was trying to steal the limelight back from the markets? Well, I'd say it worked. Meta, the company formerly known as Facebook, announced after the close that they would reduce their workforce by 11,000 people or 13%. Just to realize how far it's fallen, it used to be in the $1 trillion club on market cap, now at $255 billion, a 75% fall this year. Overall, the market was pretty quiet. The S&P ended up 0.5%, the Dow up about 1%, and the NASDAQ up 0.5% as well. Market closed, and all the news channels switched to nonstop poll watching all night long. Markets gapped lower on Wednesday as the results of the midterm elections were tabulated and reported. Overall, the big takeaway was that this tsunami of Republicans turned out to be just a little ripple. But it does look like the House had flipped to a Republican majority, and that will be enough to have a split government as I've described. The Senate, too close to call as of Wednesday, but most bets are that the Democrats will hold on to the majority there. The market did get a small pop about 10 a.m. when a report came across that Russia would be withdrawing from the Kherson in Ukraine. A defeat that was not expected, but that is movement. We'll see if it comes to mean anything. Steps to end the war, we'll see about that. Mid-morning brought a turn of attention back to the crypto. All the news of the white knight, Binance, coming in to rescue FTX. Strike that, reverse it. After further review, Binance walked away, and the crypto markets and risk overall paid the price. Add in an abysmal 10-year Treasury auction, and you had the makings of a pretty ugly day. The S&P 500 closed down a bit over 2% just off of session lows. The Dow was down just under 2%, and the NASDAQ down 2.5%. The markets attributed these losses to so many different things. I'll state it again. As long as we get a divided government, which it looks pretty clear that it is, that it will not affect markets at this time. Yes, the market did not like not knowing what the full outcome was. It always hates indecision. Add in the CPI and jobless numbers coming on Thursday, inflation info from the University of Michigan on Friday, as well as that really poor 10-year auction. That's more of what really drove the market down. Everyone to the other side of the boat again. Thursday was another day to see a full reversal in action. We knew that we'd be looking for, and there it was. Rumors all over about a hot CPI number, and what did we see? Don't believe all the rumors you hear. CPI came in much cooler than expected. At least that's the readings of the news sources and the research people. Actually, it was cooler, 0.4% rise month over month versus 0.7% as expected. That's almost half for those keeping score. Annual was 6.3 versus 6.6 expected, and it was off to the races. The NASDAQ spiked 6% in the early going. All of the major indices gapped higher and hit session highs early. Fed heads hit the street. Harker and Logan added some fuel with some dovish commentary. Peak hawkishness, we'll see. That is the market interpretation. The Fed whisperer from Wall Street Journal reiterated the call for a 50 basis point move in December, and the odds in the marketplace for a 75 basis point move moved to December moved to zero for December. The terminal rate expectations down below 5%, and the 10-year yield dropped back below 4%. Markets took another run to set new highs around an hour before the close, but they all settled strong. S&P up over 5.5% on the day. The Dow was up 3.75%, and the NASDAQ up almost 7.5%, again, on the day. This was the best day for the markets in over 2 years. The dollar also plunged by more than 2%. Just the dollar and the 10-year explain a lot of the move, even without the rest. I don't know if this is the turn, but please recall all the statistics I've given you over the past year about missing the biggest days. This was one of those. Just not sure what will follow. We have to remember the incremental versus the absolute, the line I've used for the past 2 years. Incremental changes are notable, but remember, even a 6.3% year over year, that's still close to a 40-year high in inflation, and not quite, to say the least, close to the 2% target. Also, not to throw too much cold water on this, but if you look back, this is very similar to the move we had in the summer from the June low to the August high. You do have to turn the ship before you can accelerate the other way, so we'll see what's next. Late Thursday, we did hear from voting Fed heads, Mester and George, both sounding hawkish, just to temper the conversation. Friday brought more news. China lowered their quarantine time, as we talked about, and limited their contact tracing. They're in the biggest spike in 6 months, but at least they're turning the ship, maybe. Xi Jinping and Biden are set to meet today. Crypto and the FTX scandal were top of the news list, but aside from affecting the risk-on, risk-off trade at the fringe, it was a lot of interesting news for the market historians like me, but not moving the needle on your plans and goals. Although the markets were all over the place during the day, stocks did end the week strong. The Dow was up just over 0.1%. The S&P was up just under 1%. The NASDAQ was up just under 2%. For the week, indices ended in the green as well. The S&P 500 up almost 6% for the week. Dow up just over 4%. The NASDAQ up just over 8%. Not a bad week. This was despite the implosion in the crypto market, but techs also shrugged that off and was up about 10% on the week. Amazon up 4% and Alphabet 2.5% higher just on Friday alone. This coming week will be no stranger to news also. Retail is in the crosshairs. We'll have a bunch of retail earnings, a few big name tech stocks, and the important retail sales report from October. Really, more important is the forward-looking retail sales forecast for the holiday season. Remember, we are still a consumer-driven economy. Don't forget PPI, the producer end of the inflation report, that report that we saw last week. We will see that will we see it add fuel to the peak inflation and the peak hawkishness conversation? Or will we pull the football away as Lucy always did to Charlie Brown? Not to be outdone, watch for the Fed heads, Brainerd, Cook, Barr, Waller, Bowman, and Jefferson. Finally, we are seeing more clarity in the elections. It may even come down to Georgia again, December 6th runoff, and a tie in the Senate. This will make news. But remember, I've told you, with the Republicans taking over House leadership, that should be enough to keep the gears of the legislative branch stuck. So for now, stay in touch, keep your eye on the goals, and please come back on Friday for the planning update. Have a great week.